India's largest cement company, UltraTech Cement, yesterday in a press release, and also the company actually had a conference call where it explained to multiple analysts about the extremely ambitious growth plans that the company is targeting. Now, the company yesterday said and unveiled the new leg of capacity expansion plans. The company highlighted that the next phase of capacity expansion is going to be addition of close to 20 million tons per annum, 19.5 million tons to be precise. Now, out of this 20 million tons per annum, 12.8 million tons per annum is proposed new expansion with a Capex outlay of close to 5,500 crore rupees, while the remaining 6.7 million tons per annum is the ongoing expansion that the company is already undertaking. Now, remember, this particular expansion will be a mix of both brownfield as well as greenfield capacity addition. Brownfield capacity addition at a little over 70%. Now, this will actually ensure that the company would be increasing its total domestic capacity to 131 million tons per annum by FY23, and the company and the management plans to take the overall capacity to 160 million tons per annum by FY30. So extremely ambitious plans as far as capacity addition is concerned from UltraTech management yesterday. Now, the capacity market share that the company had was close to 22.3%. Now, this is expected to increase to close to 23 to 24% by the end of FY23. Now, when you're talking about the average expansion cost, and this is what is enthusing analysts the most, the average expansion cost is set to be below $60 per ton, and this is mainly due to the higher contribution from the brownfield expansion. Now, if you go to see, you're talking about expansion in terms of acquisition cost, it is much higher, a little over 100, 110, in some cases $130 per ton, but UltraTech is managing to add capacity at less than $60 per ton. And even after these ambitious capacity expansion plans, the net debt to EBITDA stands reduced to 1.22 times versus 3.4 times at the end of the December 18. And what the management said yesterday was that the target is to reduce net debt to equity to 1 time by FY21 end. No wonder then analysts as well as brokerages are extremely enthused. Number one, what CLSA is saying is that maintaining the buy stance, they've kept the target price at 5,900 per share. Organic capacity expansion at an extremely low cost is how CLSA is pegging it. The company is seeing high growth, high profitability and returns, also seeing improving ESG metrics. Now, Capex announcements is picking up across the industry, so it bodes quite well for the cement pack. And the company also yesterday mentioned that demand outlook is robust, and CLSA is taking quite a bit of heart from that, as well as takes note of the fact that deleveraging too is on track as far as UltraTech is concerned.